Real estate can be an excellent opportunity for financial advancement. It offers the potential for significant gains through property appreciation, rental income, and tax advantages. However, contrary to popular belief, while there are great upsides to investing in real estate, there are also some serious challenges that come with it too. In today's video, we'll give you some pros and cons of investing in real estate so you can make more informed decisions when you want to buy. Welcome to Money for the Movement, where purpose and profit align. On this channel, we help conscious capitalists become more financially literate so they can help themselves while helping others. If you get value from our content, give this video a like and subscribe to our channel. Also, don't forget to turn on the bell icon so you are notified every time we release new content. Lastly, let us know what you think about this video in the comments section. We'd love to know your thoughts. All right, let's get started. The pros of real estate investing. Number 1, income generation. Real estate investing stands as an attractive option due to its capacity for income generation. Through rental properties, investors can enjoy a dependable cash flow stream, giving them consistent passive income. This financial inflow not only aids in covering property-related expenses and mortgages, but it also leaves room for surplus earnings. Such reliable income can enhance your overall financial stability and open doors to broader investment opportunities. Now that's not a bad deal if you ask us. Number 2, property appreciation. Now, if you don't know what property appreciation is, that's when over time, properties can increase in value, leading to a more lucrative sale for you if and when you decide to sell. This appreciation offers investors the opportunity to realize substantial profits, whether they are putting their property on the market, refinancing, or leveraging equity for other investments. This potential for wealth accumulation enhances the allure of real estate as a viable and potentially lucrative avenue. Pro tip number 3, leverage. Leverage is a notable advantage in real estate investing. It allows investors to use borrowed funds, like mortgages, to acquire properties. This magnifies potential returns on investments as the property's value appreciation applies to the entire asset, not just the initially invested amount. But be careful here, folks. While leveraging can amplify gains, it also demands careful consideration as it intensifies risks in case of market downturns or inadequate property performance. So you have to use it wisely, but when you do, it can significantly enhance your wealth building potential. Pro tip number 4, tax advantages. Real estate investing offers compelling tax advantages. For example, property owners can often deduct mortgage interest, property taxes, and certain operating expenses from their taxable income. Additionally, they can use something called a 1031 exchange, which allows them to defer capital gains taxes when reinvesting sale proceeds into another property. If you don't know what that means, it's okay. It's simply saying that it reduces their overall tax burden and enhances their after-tax returns. Such incentives make real estate an appealing avenue for wealth growth while fostering a strategic approach to tax planning. Pro tip number 5, diversification. Diversification is a key benefit of real estate investing. By adding real estate to a portfolio that includes stocks, bonds, and other assets, investors can reduce their overall risk. Real estate's historically low correlation with traditional investments means that performance often remains independent of broader market trends. So, this insulation helps safeguard an investment portfolio against the volatility of a single asset class, ultimately contributing to a more stable and balanced financial strategy. Pro tip number 6, control and improvements. Real estate investing grants investors a sense of control and the ability to make improvements. Unlike renting, property owners have direct influence over their assets. They can enhance property value through renovations, upgrades, and strategic management. This hands-on approach allows investors to adapt to market changes, optimize returns, and actively shape their investment's performance. This level of control and potential for value enhancement distinguishes real estate as an empowering and rewarding avenue for those seeking greater influence over their investments. And our last pro tip, but certainly not the least, pro tip number 7, inflation hedge. Real estate investing serves as an effective hedge against inflation. As prices rise, property values and rents often increase too. This intrinsic connection enables real estate assets to maintain or even amplify their value relative to the cost of living. Unlike some investments susceptible to erosion from inflation, like bonds or mutual funds, real estate's ability to align with economic changes offers investors a valuable shield, preserving their purchasing power and providing a dependable safeguard against the erosive effects of inflation. Okay, that's our list of pros for real estate investing. Now, if you haven't already done so, this would be a good time to smash the like button and subscribe to our channel. You don't want to miss this valuable weekly information. So, stay in the know, money movers, and tell your friends about us too. All right, so here are the cons of real estate investing. Con number 1, illiquidity. Most people want liquid assets, which means you can easily turn them into cash with little loss of value.
If you liquidate that right now, you'll have maybe $5,000.
However, in the real estate game, things don't move as quickly. Illiquidity stands as a notable drawback in real estate investing. Unlike easily tradable assets, properties require time and effort to sell, and this lack of quick liquidity can hinder an investor's ability to access funds promptly. Market conditions, buyer interest, and transaction complexities can further prolong the selling process, potentially tying up capital when needed for other opportunities or emergencies. Overall, illiquidity underscores the importance of strategic planning and a long-term investment perspective in real estate. So folks, please, you have to think before you buy. Con number 2, high initial costs. Most people don't have hundreds of thousands of dollars in their bank accounts, which is what most properties cost, so they won't be able to buy a house in cash. Thus, high initial costs pose a significant downside to real estate investing. Acquiring properties requires substantial upfront expenses, including down payments, closing costs, and potential renovation fees. This financial barrier can limit entry to the market for some investors and potentially strain resources. Moreover, these costs can impact the overall return on investment, delaying the point at which profits are realized. The considerable upfront investment underscores the need for thorough financial planning and careful consideration before entering the real estate market. Con number 3, market volatility. Now, market volatility also stands as a notable disadvantage in real estate investing. As we said earlier, property values can be influenced by economic fluctuations, which can impact potential returns. In addition, unpredictable shifts in demand and supply can lead to prolonged periods of stagnant growth or even declining values. This instability can challenge investors' ability to accurately forecast outcomes and necessitate a more patient and adaptable approach to navigate changing market conditions. And, yep, you guessed it, this can potentially impact the anticipated profitability of real estate investments. Con number 4, management responsibilities. Now, another significant downside to real estate investing is managing the property. There is no landlord to call when something breaks or a toilet is clogged, because you are the landlord.
This is my house.
Property owners are tasked with handling tenant interactions, property maintenance, and unforeseen issues. The time, effort, and expertise required can become burdensome, especially for those with multiple properties. Ultimately, the demands of property management can limit investors' freedom and potentially lead to stress and additional costs. This drawback underscores the importance of considering whether active management aligns with your goals, resources, and willingness to dedicate time to oversee your investments. Con number 5, and one of the most annoying, is unpredictable expenses. As we just mentioned, unpredictable expenses can be a major headache when managing a property. Whether a group of college kids busts a hole in your wall or a pipe bursts in the middle of winter, these unexpected costs can disrupt your cash flow projections and erode your anticipated returns, not to mention increasing your blood pressure. All of this highlights the importance of building a buffer in your financial planning, conducting thorough property inspections, and maintaining a diligent approach to property upkeep to mitigate the impact of unforeseen financial burdens. Now, maintaining this diligent approach to property upkeep is an absolute game changer, folks. It has to be done. Con number 6, market timing. Attempting to buy or sell properties at optimal points in the market cycle requires accurate predictions of future trends, a task fraught with sheer uncertainty.
We sold our house! We did it!
Well, okay.
Misjudging market shifts can lead to missed opportunities or even financial losses. When the point of investing is to make a profit, bad timing can take you in the other direction very quickly. So, really think it through before you buy and try your best to time the market correctly. It could make the difference between being in the red or being in the black. Finally, our last con number 7, regulatory challenges. Our last con of the video is about regulatory challenges, which are never fun, no matter what industry you're in. But when it concerns real estate, navigating complex and ever-changing regulations at local, state, and national levels can be time-consuming and demanding. Zoning laws, rental regulations, and property codes can vary significantly, impacting your ability to operate, develop, or rent properties. So, compliance with these regulations is essential, as violations can lead to fines and legal disputes. In the end, successfully managing regulatory hurdles requires thorough research, legal counsel, and ongoing vigilance to ensure properties remain compliant and investments remain secure. So, there you have it, money movers. 7 pros and cons of real estate investing. As we said in the beginning of the video, real estate investing offers a range of advantages, from income generation and property appreciation to tax benefits and control over your investments. However, it also has its potential drawbacks, such as illiquidity, high initial costs, and market volatility. So, by carefully weighing the pros and cons and conducting thorough research, you can make informed decisions that align with your financial goals and risk tolerance. That's our video for today. Remember to give it a like and subscribe to our channel. Also, turn on that bell notification so you can be notified every time we release new content. Lastly, let us know what you think about the list in the comments section. We'd love to know your thoughts. See you next time, money movers, and remember, invest wisely.